This House is now in session.
Mr. Deputy Speaker, we revert to statements by ministers.
Yeah. Statement by Minister. Member for St. Mike, St. Christchurch, East Central.
Mr. Deputy Speaker, the following is a statement in respect of the mid-year review as required under the Public Finance Management Act proclaimed earlier this year. The fiscal program for 2019-2020 approved by Parliament showed current revenue of $3,148.44 million on an accrual basis and $3,051.51 million on the cash basis. Estimates for 2019-2020 projected total expenditure at $3,180.81 million, inclusive of amortization of $373.38 million and capital expenditure of $199.90 million. During the period under review, total revenue inclusive of arrears was $1.45 billion, an increase of $121.1 million over the previous year and $4.45 million more than projected. Tax revenue for the first half of the year was $1,370.4 million, reflecting an increase of $123 million when compared to the previous year and $2.3 million when compared to projections for the period of $1,368.1 million. Of the total revenue collected, revenue from direct taxes was $583 million and indirect taxes $787.4 million. Increases over projections, sir, were mainly recorded for property taxes and value-added taxes and to a lesser extent personal income taxes net. The main decrease in projections were seen in corporation taxes, excise taxes and other indirect taxes. Property taxes, which were recorded at $171.5 million, increased by $52.2 million when compared to the budget of $119.3 million. Timing of the issuance, sir, of the land tax bills for the fiscal year 2019-2020 resulted in a significant increase of $143.1 million when compared to the previous year. It is, however, anticipated that there will be no significant increase in collections over the entire fiscal year. Despite a reduction in excise taxes of $17.7 million when compared to the budget of $132.5 million, revenue from indirect taxes increased by $8.7 million, due mainly to an increase in value-added taxes on a net basis of $49.3 million. VAT on imports increased marginally by $8.7 million, while VAT on domestic sales increased by $39.6 million. Collection of arrears of domestic value-added taxes was approximately $4 million. When compared to the previous year, the increase in value-added taxes of $27.3 million was marginally lower, with the value-added tax on domestic production and imports increasing by $8.1 million and $19.21 million, respectively. Taxes on personal incomes on a net basis showed a slight increase of $2.1 million over projections. During the period under review, the Treasury transferred $27.9 million to the Barbados Revenue Authority for the payment of tax refunds for the tax year 2018, sir, payable by October 31st, 2019. During the previous year, an amount of $20 million was transferred for the payment of arrears of tax refunds. The budgeted amount for refunds for the period under review was $14 million. Corporation tax, recorded at $124.1 million, showed a significant decrease when compared to the budgeted amount of $170.9 million, and the previous year amount of $161.7 million. Collection of arrears in this sector of $10.58 million was recorded during the period and helped to reduce the overall impact on collections of the decline in revenue. Other areas of taxes showed moderate increases, with the exception of international taxes, bank asset taxes, and other indirect taxes, which recorded declines over the budgeted amounts. Import duties showed a slight decline of $5.9 million when compared to budget, though it was $3.7 million higher than the previous year. Mr. Deputy Speaker, this decline could be attributed to the teething problems associated with the implementation of the new software as the Customs Department sought to implement the new Asicuda World System. Other indirect taxes at $92.2 million recorded an increase of $28.2 million when compared to the previous year, but was below the budget amount of $110.6 million by $18.3 million. Special receipts performance, sir, was lower than both the previous year and the projections for the period under review. This poor performance in the area of special receipts can be partially attributed to the less than anticipated performance of the direct tourism services product levy and the room rate levy, inclusive of the shared economy level, which is still awaiting the passage of the requisite legislation to give effect to the collection of this tax. It should be noted that the National Social Responsibility Levy was repealed during the second half of the previous year. Fuel tax has performed in line with projections, sir, recording $38.4 million for the period. Non-tax revenue, reported at $73.9 million, performed below both the budget and the previous year's balances. Highway revenues were marginally below projections, though higher than the previous year. All other areas of non-tax revenue performed cumulatively below the budget and the previous year. Grant income of $10 million was received during the period under review. Overall, sir, the revenue outturn for the period was positive. Total revenue projected for the period October 2019 to March 2020 is now $1.6 billion, for a total revenue of $3.06 billion for the financial year. This is marginally more than the approved amount of $3.05 billion. During the first half of the year, sir, expenditure forecasts remain broadly in line with original budgets, with no significant new or altered spending decisions. Total expenditure for the period April 2019 to September 2019 was $1,158.6 million, exclusive of loan amortization of $147.1 million. This compares to $1,314.1 million during the same period for fiscal year 2018-2019, reflecting a fall of $155.5 million. This fall in total expenditure was as a result of a decrease in the current expenditure of $160.8 million, or 12.6%, sir, and a net increase in capital expenditures of $10.7 million, or 42%. When compared to the projected expenditure, sir, of $1,290 million, there was a gap, sir, of $131.4 million. With regards to wages and salaries, compensation of employees accounted for 29%, sir, of the total spent. Overall, salaries and wages for the half year ending September 2019 totaled $364 million compared to $372 for the same period last year. This actual figure represents savings of $12.1 million when compared to against the budgeted amount. The budget amount, sir, of $1,600,000 $20,461 should be adequate, sir, to cover the remainder of the financial year. To date, $145 million has been spent on goods and services, an increase of $4.9 million when compared to the previous year. This is slightly below the budgeted projections. For the next 6 months, sir, it is projected that $244 million will be spent. This is in keeping with the previous norms, where the majority of spending is done in the latter half of the financial year. Total current transfers, sir, fell by $36 million for the period under review. Grants to public institutions fell by $79 million due to the fact that transfers to state-owned enterprises are now current and no arrears are being paid as was done during the previous year. For the period under review, total transfers to state-owned enterprises were $235.5 million compared to $314.3 million for the previous year. Of the $235 million, $183 million was paid to those entities monitored under the Barbados Economic Recovery and Transformation Program. Of this group, the University of the West Indies and the Queen Elizabeth Hospital received 30% and 31% respectively. Additionally, transfers to the Barbados Tourism Marketing Inc., the Queen Elizabeth Hospital, and the Sanitation Services Authority, sir, were reduced with the introduction of the airline travel and development fee, the health service contribution, and the garbage and sewage contribution, respectively. Total collections, sir, in these 3 levies were $37.84 million for the BTMI, $30.3 million for the Queen Elizabeth Hospital, and $33.9 million for the Sanitation Service Authority, respectively, for the period under review. Whilst transfers to state-owned enterprises fell, sir, transfers made through retirement benefits increased by $33 million, of which $5.6 million was related to pensions and gratuities and $28 million to other retiring benefits. Capital expenditures projected for the period was $86.9 million. To date, sir, only $36.5 million, or 42% of the projected amount, has been spent. However, when compared to the same period last year, capital expenditure increased by $10.7 million, or 29%. Capital formation, sir, totaled $28.5 million compared to $8 million for the previous period, an increase spend of 256%. Capital transfers, sir, move in the opposite direction, falling 55%, or by $9.8 million. For the period under review, $8 million was spent compared to $17.8 million for the corresponding period last year. For the next 6 months, sir, total capital expenditure is projected at $207.8 million, allocated between capital formation and capital transfers at $181.1 million and $26.7 million, respectively. At the beginning of the financial year, sir, government arrears of payments to trade creditors, sir, stood at $577.7 million. The outstanding balance, sir, at September 30th, 2019, was reduced to approximately, sir, $316.8 million, sir. Payments were made to reduce tax refund arrears, sir, by $40.5 million. State-owned enterprises trade creditors, sir, by $176.2 million, sir, in the form of cash, $30.2 million, sir, in cash, and bonds, sir, $143.3 million. And arrears, sir, of central government transfers to private sector agencies by $29.6 million. Sir, overall, expenditure for the financial year was kept in line. Total expenditure I don't have a page number. Sorry. Overall expenditure for the financial year was kept in line. Total expenditure for the period October 2019 to March 2020 is projected at $1,609.4 million for total expenditure of $2,768 million for the financial year. This is below the approved amount, sir, of $2,807.43 million. During the first half of the financial year, the suspension of external commercial debt payments announced on June 1st, 2018, sir, remain in effect as negotiations with the external commercial creditors continued. On the domestic side, a decision was taken in respect of the winding up of Res Life and saw Series G bonds previously issued to Res Life being exchanged for Series B and Series I bonds and a cash payment to individual policyholders. Additionally, the government assumed $26.3 million in liabilities, namely overdraft facilities previously held by 3 state-owned enterprises, and converted them to a term loan to be serviced by the government. Public debt outstanding, sir, at September 30th, 2019, stood at approximately public debt, sir, outstanding at September 30th, stood at approximately $12,411 million, approximately 118.2% of GDP. This is comprised, sir, of external debt of $3.046 billion and domestic debt, sir, of $9.109 billion. External guarantee debt of $89.8 million and central government arrears of $165.5 million. As at September 30th, 2019, sir, the outstanding debt is under the IMF ceiling on public debt of $12.689 billion by approximately, sir, $277.1 million. The actual expenditure during the period amounted to approximately $269.8 million compared to the approved estimates of $369.9 million for the period, a difference of $100.1 million. Approximately, sir, 85 million of this was expended due to the delay in the settlement of the external commercial debt, slower project disbursement, and lower interest rates during the period compared to original projections accounted mainly for the remainder. Approximately $316.6 million will be required, sir, to service existing debt obligations for the period October 2019 to March 2020. $129.1 million for interest expense and $187.5 for amortization. This is approximately $43.5 million less than what was budgeted for the period, resulting from the delay in the settlement of the external commercial debt. Total revised debt expenditures for 2019-2020 is estimated at $586.4 million. This is approximately $143.6 million less than what was approved. The projected reduction in expenditure is primarily attributed, sir, to the delay in the resolution of the external commercial debt, which will now see the commencement of payments with respect to the restructured bonds from April 2020. During the period under review, government continued its efforts to reduce transfers to the state-owned enterprises through a combination of much stronger oversight, improved reporting, cost reduction, and a revenue enhancement. It should also be noted, sir, that today the state-owned enterprise sector is undergoing significant reform under the Barbados Economic Recovery and Transformation Program, following which it is expected that the measures implemented will assist the government of Barbados in addressing the challenges facing this sector. There are 33 state-owned enterprises listed in the technical memorandum of understanding between the International Monetary Fund and the government of Barbados, 22 of which are commercial and 11 non-commercial. For the period April to September 2019, sir, the entities reported an aggregate net profit of $60.95 million, commercial state-owned enterprises were the major contributors to the aggregate net profit, accounting for 83% or 50.85 million of the total, whilst the non-commercial state-owned enterprises accounting for the remaining 17% or 10.1 million of that amount. This represents an increase, sir, of 50.7 when compared to the 10.4 earned in the previous year. 15 of the entities, sir, reported profits of $87.9 million, while the remainder 13 incurred losses, sir, of $26.95 million. The top 5 performers, sir, were No Life Insurance Company, Inc., No Life Investment Company, Inc., sir, Barbados Tourism Marketing, Inc., Barbados Water Authority, Queen Elizabeth Hospital, and Barbados Agricultural Development Marketing Corporation, with profits of $23.87 million, $17.3 million, $8.82 million, $8.38 million, and $6.56 million, respectively. For 2018, sir, the reverse was true, for 13 entities reporting profits of $55.78 million, while the remaining 15 incurred losses of $45.54 million. The 5 major underperformers, sir, were the Barbados Transport Board, the National Conservation Commission, the National Assistance Board, the Fair Trading Commission, and the Child Care Board, with losses of $9.05 million, $5.78 million, $2.72 million, $1.99 million, and $1.49 million, respectively. It should be noted, however, that NLECO improved performance was mainly due to gains on the disposal of assets. While it is expected that the commercial entities would comprise the top performers, it is noted that 2 of the 5 underperformers, the Transport Board and the National Conservation Commission, had combined losses of $14.83 million, representing 55% of the total. The aggregate revenue for the state-owned enterprises, sir, amounted to $451.33 million, increasing by $80.63 million over $370.69 million reported for the previous year. Overall, the commercial state-owned enterprises were responsible for $373.11 million, or 83% of the aggregate revenue. The Queen Elizabeth Hospital, sir, was the top revenue performer, mainly because of the government subvention of $72.73 million, followed by the 2.5% health service contribution, which contributed $30.37 million during the period. Without these sources of income, the operations will not be sustainable, since the QE's core business of patient services fees only brought in $5.3 million, or 5% of its total revenue. Within the commercial entities, operating revenue, sir, was the largest component, accounting for 55% or $203.31 million of the group's combined income of $371.01 million. Subventions from government were still significant, however, comprising 30% of the total, whilst other income was 15%. Within the non-commercial entities, the situation was the opposite, as government grants totaled $60.37 million, or 80% of this group's income. Operating income contributed $15.12 million, or 19%, while a mere 1%, or $0.72 million, was accounted for by other income. Sir, the aggregate total expenses were $389.35 million for the period under review, rising by $27.88 million over the 2018 period expenditure of $361.47 million. Wages and salaries accounted for 48.5% of the total, followed by operating expenses with 38.3%. For 2018, wages and salaries was $184.91 million, or 51%, followed by operating expenses with $127.94 million, or 35.4%. The commercial state-owned enterprises were the significant contributors to the costs for both 2019 and 2018, accounting for 83% and 82%, respectively. The top 5 spenders for 2019 were the Queen Elizabeth Hospital, $99.52 million, Barbados Water Authority, $78.32 million. Barbados Tourism Marketing, Inc., $37.01 million. Transport Board, $26.44 million. And Sanitation Services Authority, $24.02 million. This was largely similar to 2018. State-owned enterprises arrears for trade creditors at April 1st, 2019 were $263.51 million, with statutory arrears of $6.46 million and non-statutory arrears of $257.05 million. Within the Technical Memorandum of Understanding, TMU, sir, the arrears at April 1st, 2019 totaled $252.92 million, with non-statutory arrears of $252.63 million. At the end of September 2019, the arrears declined by $176.2 million and stood at $87.31 million. The decrease in the arrears between the beginning of April 2019 and the end of September 2019 was primarily due to the measures put in place over the past 6 months, namely the issuance of bonds and the discounted offer of 85% to trade creditors. Although the entities in the TMU, sir, showed improved performance in 2019, a number of them experienced escalating operating costs when compared to 2018. The 4 major entities identified were the Queen Elizabeth Hospital, the Barbados Water Authority, Barbados Tourism Marketing, Inc., and the Transport Board. Given the financial context in which these entities are operating, special focus will be given in order to identify effective measures to reduce these costs. Additionally, based on the analysis, entities such as the National Assistance Board, Caribbean Broadcasting Corporation, Transport Board, and National Conservation Commission have experienced operating losses ranging from $2 million to $9 million, and these will continue to be carefully monitored. Unfortunately, the review still identified financial and structural deficiencies that could increase the government's exposure to fiscal risk if not properly managed. It is therefore important that we continue to regularly engage with these enterprises and to provide strong oversight, especially in the area of financial reporting. A number of highlights have, however, been achieved during the period, namely, the Public Finance Management Act has been proclaimed, and this provides government with a strong legal framework to target areas of deficiencies within the state-owned enterprises, such as gaps in accountability, transparency, and fiscal prudence. A great effort has been made to accelerate the completion of the outstanding audited financial statements, with a majority of these now up to date. This would give government better assurance with regards to the reliability of the information contained in the financial statements. And lastly, sir, a thorough review has been done of the tariff and user fee structures, which will assist in addressing poor cost recovery in the state-owned enterprise sector. In closing, sir, the mid-year period, April 2019 to September 2019, saw government achieving and surpassing the projected targets. Based on the revenue earned to date of $1,454.4 million, the expenditure of $1,158.6 million, and the projected revenue and expenditure for the period October 2019 to March 2020, government should also achieve its target of a primary balance of 6% of GDP for the financial year April 2019 to March 2020. I'm obliged to you, sir.
Mr. Deputy Speaker, revert to government business.
Yes.
Mr. Deputy Speaker, with that, we've come to the end of government business for the day. I beg to move the adjournment of today's sitting until the 5th of November at 10 a.m. in the morning.
Question is that this House be adjourned until Tuesday, the 5th of November at 10 o'clock in the morning. All members in favor say aye. Those against say no. I think the ayes have it. This House is now adjourned until the 5th of November at 10 o'clock in the morning.